welcome to NDTV Profit. My name is Varsha. Orchid Pharma is in focus today. Company recently reported its Q1 numbers, wherein if you see good set of numbers actually. Revenue was up almost 33%, but if you see net profit was up 3x. Well, to speak more about the numbers and the business outlook, we have with us Mr. Manish Dhanuka, who is Managing Director of Orchid Pharma. Welcome, Mr. Dhanuka. If you see, was there any one-off factor in Q1 that contributed to higher than usual performance for the company? Typically, we see stronger performance in the second half of the year.
See, what we have been trying to achieve a growth of 20% over the last few years, and I think this quarter was reasonably good for us. But I can tell you that we will continue to have about 20% growth. Yeah, there could be some averaging from one quarter to another quarter. It depends on our customers' buying pattern, which is not in our control.
So, can we see moderation in growth going forward? Because you say that you are guiding towards 20% of growth for the overall FY25.
Overall, that's what we are aiming to do. But I feel that with the launch of our new drug in India in this quarter, I think we could probably have a higher growth also.
All right. Also, we had these two similar capacities which were coming, one on the sterile side and one on the oral. And overall, what is the capacity utilization both on sterile and oral? And is this growth pricing-led or volume-led growth?
So it's volume-led growth. Overall, we have sold more in quantities. With respect to your question on capacities, I think we are already enhanced our capacities in both sterile and one set of enhancement in the oral capacities also. And at this point, I would say we are around 70 to 80% utilization.
All right. So, considering 70 to 80% of utilization, what is the Capex plan going forward for maybe FY25 and 26?
See, largely we have three set of projects going on at this time. One is our largest investment, which is into the 7 ACA plant being set up in Jammu. That will entail an investment of around rupees 600 crores. Then we have another set of investment for manufacturing injections based on our agreement with GARDP. This is the Shionogi proprietary drug which we have licensed in. This would require an investment of around 150 crores. And the third one is for further enhancement of our oral APIs, which will probably need about 80 to 100 crore rupees. So these are the three investment plans going on at this time.
Understood. Well, this new 7 ACA manufacturing plant in Jammu, will this help to improve margins because this will allow you to produce more value-added products?
Yeah, so the basic idea of the PLI scheme is indigenization of all the key raw materials, and I think it will definitely de-risk ourselves from our sourcing of this key raw material from China. And we are very hopeful that we will be able to manufacture it at a very competitive cost, and it would definitely, in that case, help us in reducing improving our overall cost efficiency.
Well, but this 7 ACA manufacturing plant will come post FY26, if I'm not wrong.
That is
right. So in FY25, where do you see your margins from current around 13%?
So you see, we are continuing to grow our sales in various markets. So as we've seen in last 2-3 years, when we increase our sales, our overall expenditure gets spread out evenly. And in terms of percentage, if you see, our percentage expenses, the manufacturing expenses have gone down by 3% in percentage terms. The other expenses have also gone down by 3-4%. Employee expenses have gone down by 1%. So that's going to basically lead to growth in the profitability. In addition to that, the new molecule that we will be now distributing along with Cipla, that should also add to our bottom line.
So this current 13% margin, can we see an uptick of maybe 100 to 150 basis points in FY25 especially?
It's actually difficult to give a guidance on this because we are working on multiple models at this point of time, and how they will pan out is difficult to predict.
Well, your new antibiotic drug, which you have partnered with Cipla as well for distribution, are we on track to launch this? Because I believe that in August or September we were expected to launch this product.
Yeah, we should be able to make the drug available in the month of September. Yes.
And with this, maybe in next 1 to 2 years, the new additions that you are adding into your portfolio, what is the incremental revenue that you are targeting in next 2 years?
So, along with this new drug, we are also launching our new critical care division known as the Orchid AMS, in which we will focus on the antimicrobial solutions. And this is a hospital-based business where we will have a wide portfolio of antibiotics. And we will like to promote the antibiotics to hospitals in kind of a different business model. And we hope that this business can pick up to become a reasonably large share of our overall revenue.
Okay, and also, do you have any updates on business development when it comes to US? How was this year, and how are you targeting next year, especially considering one of your main customers lost its US FDA?
Yeah, so the development with some other customers are going on. This customer we had developed some 2 years back. So we have also seeded our samples and other documents to other customers who have filed to include Orchid as one of the sources. That is a continuous exercise, and what happens to the customer is not in our control. At the same time, we have also filed an ANDA of our own, and hopefully we should be able to get that registration in, say, about 2 years' time. So that should add to revenue after 2 years.
Understood. Also, I wanted the revenue breakup of your regulated versus unregulated market, and where do you want to take this contribution to?
So this is actually largely not in our control. I would rather say that since majority of the growth comes from the non-regulated markets, the antibiotic business in the regulated markets is largely saturated, except for the molecules which go off patent. That is the only area where you can get growth in the antibiotics at this point of time. So I believe largely growth will come from non-regulated markets, and the share of non-regulated markets should grow significantly. But I think considering the distribution of expenses around a larger set of turnover, that should increase both our top line and bottom line.
All right. Last question before I let you go. Do you have any update when it comes to Dhanuka merger? What are the timelines? What are the remaining steps?
So we had filed this sometime in December. The stock exchanges, I believe, have sent it to SEBI. We are answering some of the queries from SEBI, and hopefully that should be cleared from SEBI. At least we are hoping within this month, and then we will have to take it up with NCLT. Giving a timeline would not be in our control yet.
All right, understood. Well, thank you so much, Mr. Dhanuka, for answering our questions, and all the best for the business.
Thank you. Thank you for having me.